Come to question number 1. ABC Limited manufactures and sells healthcare products and food and grocery products. Very practical example. 3 products, namely A, B, and C, are manufactured. Product A is classified as healthcare product, and product B and C are classified as food and grocery products. Product B and C are similar products. Discrete financial information is available for each manufacturing locations and for the selling activity of each product. There are 2 line managers responsible for manufacturing activities of product A, B and C. Manager X manages product A. Manager B manages product B and C. The operating results of healthcare products, that is product A, and food and grocery products, that is product B and C, are regularly reviewed by the CODM. Identify the reportable segments of ABC Limited. So this question is so clearly designed, everybody will come to same answer. How many reportable segments will be there now? 3 or 2. Can I aggregate? Question is, can I aggregate food and grocery products? Some hints are given that product B and C are similar products. Okay, they are managed also in such a manner that line manager also look after B and C together. So therefore the answer is, in this situation, what you can do, you can make 2 segments in your presentation: healthcare product, food and grocery product. A you will put in healthcare product, and B and C you will put as food and grocery product. Meet the criteria for operating segment. What is the meaning of operating segment? That these are components of the enterprise whose performance is regularly reviewed by the CODM for allocation of resources, for which discrete financial information is available. So they are operating segments. But then what you can do, you can aggregate some segments on the basis of similar features. Therefore, it is likely that ABC Limited's operating segment would be classified as being healthcare product, 1 segment, food and grocery segment as 2nd segment. You can do the clubbing. Otherwise, companies will get mad. Some years ago in India, when first time this standard was introduced, and then we were doing audit of some big listed company, they said we have this Clinic Plus shampoo, and we have like this a 50 ml bottle, 100 ml, 200 ml, then 500 ml. Should I show it 4 segment? No. The answer is no. And not only Clinic Plus, then you are also having something like Sunsilk and all these different shampoos. Should I show each of them separately? Within that also nowadays you have multicolor also. Okay, pink color, yellow color, green color, blue color, white color. Different designs are there. So the answer is no. You have to bring down them to a less number of segment so that it is meaningful. Next question. A detailed answer you will read there. Okay, they have given a detailed explanation. Lot of paragraphs of this standard they have quoted. X Limited is engaged in the manufacture and sale of 2 distinct type of product A and B. Question number 2. X Limited supplies the product in the domestic market in India as well as in Singapore. There are two regional managers responsible for manufacturing activity of product A and B worldwide, and also two other managers responsible for different geographical areas. Now, this company will have a difficulty in identifying the operating segment because they are monitoring the products location wise also, and they are also monitoring the product wise also, location wise also, product wise also. Some managers are responsible for location, some are responsible for manufacturing activity. For internal reporting purpose, X Limited provides information product wise and as per the geographical location of the company. Earlier, before this standard was revised, the old version of the standard was called segment reporting. Then this was revised. Earlier they used to allow matrix presentation. Which presentation? Matrix means you give importance to both. So you can write like this: product A, product B, India, Singapore. So total of this will give you India's total. Total of this will give you Singapore total. Total of this column will give you product A total, and total of this column will give you product B total. So if you want product wise data, that is also available. If you want location wise data, that is also available, right? But now this operating segment says you have to find out what is your operating segment. Is it product or is it location? And then you give the disclosures accordingly. So for internal reporting purpose, X Limited provides information product wise and as per the geographical location of the company. CODM regularly reviews the operating results of both sets of components. To make your life more difficult, he is also reviewing the information for both sets of component. He looks at area wise also, product wise also. Now the question is, how should X Limited identify its operating segments? So then you have to apply the principle of the standard. Ask the CODM, what is the basis for allocation of resources? There must be some basis, either product wise or location wise, and therefore it is the CODM only who will be able to clearly guide you that this segment is the operating segment, product wise or location wise. In this situation, both the geographical sales area and the product area may meet the criteria for operating segment. In such situation, it is more difficult to determine clearly which set of components should be identified as entities operating segment. Therefore, the entity should assess whether the identified operating segment could realistically represent the level at which the CODM is assessing the performance and allocating the resources. So you have to actually see how the CODM is assessing performance and allocating the resources. Therefore, X Limited should consider all the above factors and apply judgment to determine which component should be disclosed as operating segment. So some degree of judgment was involved in this previous example. Now one small question. Number 3, X Limited is engaged in business of manufacturing and selling products. Varieties of paper like adhesive paper, anti-rust paper, antique paper, art paper, etc. are manufactured and sold by X Limited. Should X Limited classify these papers into different segments? One has to see the economic characteristics of these papers. Are they significantly different from each other or not? If the answer is no, then we can aggregate them. Okay. So while writing the answer in the exam, what they are trying to check your ability to write those aggregation criteria. And if these aggregation criteria are similar, then we can club them as one segment only. Two or more operating segments may be aggregated into a single operating segment if the segments have similar economic characteristics and the segments are similar with respect to other factors like nature of product, production process, type of customer, distribution method, and regulatory requirement. In case of X Limited, so far as varieties of papers are concerned, if all factors such as nature of product, production process, type of customer, distribution method, regulatory requirement are common, there is no need to create different segments for each type of paper. Is it right? Giving so much of detail means you are inviting trouble for yourself. Your competitor will know on this paper how much margin you have, on the other paper how much margin you have. So this will give more ideas to your competitor rather than the investors. Investor is happy as long as the economic characteristics are same. Then what are reportable segments? There are hundreds of segments in a company, for example. If not 100, let's say 40 segments are there, 20 segments are there. Are we supposed to give disclosure about all these operating segments? No. You have to give disclosure only for your major segments, which the standard tells you how to identify them, or some other segments which are compulsorily required or the management wants to disclose. All these small segments, okay, less significant segments can be merged together as other reporting segments, others. Okay. Now this is a highly probable area in the exam. They can give you 10 segments in a question and they will ask you identify the reportable segments. That means the segment for which the reports is to be prepared as per the standard. How to determine reportable segment? So I am going to apply 3 tests. Which 3 tests? Revenue test, then result test, profit or loss result test, third asset test. Okay. So now first you come to paragraph number 2, where it is mentioned below in paragraph 2, revenue test. What do you mean by revenue test? Revenue is an important indicator of significance, okay, of a segment. So the revenue of that segment, including both sales to external customer and inter-segment sale or transfer. Okay, that means sale to internal segment, sales to external parties together should be at least 10% or more of the combined revenue, internal plus external, of all the operating segments. So simple terms, revenue is 10% or more of the total revenue. But while calculating revenue, we will consider internal as well as external sale. Why internal sale is also considered? We have discussed in the beginning, some segments may only supply to other segments only, and they may not supply to external parties, but they may be important because huge amount of money may have been invested in those segments. So therefore, we need to assess their performance also. Otherwise, they will skip out of this revenue test. Now solve one small example on your screen. This is one question also in your notes, which I am taking as a illustration for understanding this reportable segment identification. I think question number 7. Just check. So this question number 7, we are going to use it for example purpose to understand the concept of reportable segment. Keep that in front of you. I am coming to this again and again. So these are my segments A, B, C, D, E, F, G, H. This is external sale. This is inter-segment transfer. And this is total revenue. Now for exam purpose, many times they don't give you this column. Okay, they don't give you this column. They don't give you this total line also. So what you will do, because I have seen many students taking this column as a basis for deciding the segment on the basis of revenue, which is wrong. You have to first calculate the total revenue including inter-segment transfer. So which column is relevant? Total revenue column. How much is the total? 615. 10% of that, 61.5. That means if the total revenue of a segment is 61.5 or more, 10% of 615 is 61.5. Now you tell me which segments are reportable segment here. A, B, C also. That's it. So by applying revenue test, this company will say A, B, C are reportable segment, and it is compulsory now. Now the management cannot say I don't want to report B. Okay, because B has only inter-segment transfer. You can't do that. You have to report ABC. Mandatory. These are called mandatorily reportable segment. Next I will call profit or loss test, or I can also call it result test. Profit is also an important indicator of the significance of a segment. And what is the benchmark here? Same 10%. At least the profit of this segment should be 10% or more of the total profit. But sometime what happens, some companies have many segments. Some of them are profit making, some of them are loss making. And suppose theoretically the total of the profit of all segment is equal to total of loss of the loss making segment. Company's total profit is 0. Then how do you apply this theorem? So what they are saying, you first divide your segments into two. Which two? Profit making, loss making. Take total profit of profit making segment. Take total loss of loss making segment. Choose higher of the two. Choose higher of the two. Suppose for example this is 100 and this is 120. So I will choose 120, ignoring the negative sign, into 10%, minus 12. Now any segment whose profit or loss is 12 or more, 12 or more, ignoring negative sign, then it is a reportable segment. So 10% of the total profit or 10% of the total losses, whichever is higher, will be taken. And then those segments which exceed this limit are reportable segments. Okay. So I'm going to give you the same illustration for checking your knowledge on this topic. Have you understood or not? So this is my company which has 8 segments. This is the profit or loss. So you separate profit making segment. What is the total of profit making segment? Take on your calculator. 10, 15, 12, 5, 7, 23, 72 only. Total of losses 185. Sorry, 85 and 25. 110. Is it 110? Higher of the two. 10% of 110. 11. So now I will tick mark all those segments whose profit or loss is 11 or above. Can I tick mark A? B? No. C? Yes. D? Yes. E? Yes. and H. So A, C, D, E, H are reportable segment. And in the previous test, which were the reportable segment? A, B, C. So far we have identified A, B, C, D, E and H as reportable segment. Is it right? Then you apply the third test. We will call it asset test. This is the simplest. The segment asset is 10% or more of the combined asset of all operating segments. Same example again. Go to the last column, which is total asset. Total asset of all segments is 100. 10% of 100, 10. So if the segment asset is 10 or above, it is reportable segment. A, B, only A and B. So A and B. Before that it was A, B and C also in revenue test. And A, C, D, E, H. A, C, D, E, H under profit test. So I can make a summary now. A is reportable, B is reportable, C is reportable, D is reportable, E is reportable and H are reportable now. Only two are remaining, F and G. Wait, the standard has something more to say. Normally student will stop here and they will say A, B, C, D, E, H are reportable segment. But your answer is incomplete. It's not wrong, but it is incomplete. And out of 8 marks, you may get 4 marks. Why? There is some more test to be applied. Now IFRS 8 lays down 3 other situations in which an operating segment that does not qualify to be a reportable segment on the basis of 10% threshold test can be included as a reportable segment. Now there are 3 situations when you don't meet 10% criteria. Still you will be a reportable segment. 1. The operating segment which have not passed through the above test may be reported by the management if in its judgment the disclosure is useful to the users to understand the financial statement better. So this we will call management's judgment. This will call management judgment. Management may want to disclose some more segment on its own. Probably because management wants to highlight this segment. In future they want to either expand this segment, sell this segment, demerge this segment, okay, or they think that it will help in better presentation. So one more segment they may choose. Second situation is there may be many small segments which may not meet 10% criteria, but they have similar economic characteristics and share a majority of the aggregation criteria. Similar economic characteristics and most of the aggregation criteria are similar. So then the standard says individually they may not meet that 10% criteria, but together they can meet. So we can club them together and put them as one segment. So some of the operating segment that did not qualify as reportable segment can be combined if they have similar economic characteristics and share majority of the aggregation criteria. For example, aerated drinks Pepsi, fruit juice, water. So there are companies which sell all the 3 products. They sell Pepsi like aerated drink. This company has some product where they sell fruit juice also in that small boxes, and they also sell mineral water. But these are similar in economic characteristic and they have similar aggregation criteria also. Type of customer is same, production process is same, nature of product is same or similar, regulatory environment is similar. So then you can club them also. Normally the first and the second the student cannot do anything unless they give in the problem. What you will have to do in the exam, you have to apply this test now. What is this test? The external sale of the reportable segment. How many segments we have identified in that example? 6. A, B, C, D, E and H. The external sale to external parties should be at least 75% of the entity's total external sale. Otherwise, it should not happen that you are only reporting those segments which are making inter-segment sales. Okay. So you have to add more and more segments till we reach 75% external sales of the reportable segments. Now, in this case, you may have to add more segments till you reach 75%, and those additional segments you have added may not meet any of the 10% requirement. So we'll come back to this question, but first to see the summary. This will be useful for you. First test is reported revenue is at least 10% of total entity revenue. Then reported profit or loss is 10% of the combined profit or loss. Segment assets are at least 10% of the total entity asset, and reportable segments should account for at least 75% of the entity's external revenue. These are called thresholds, limits, benchmark. Come back to this question. Now in the exam you have to conclude it properly. Your answer is not over. Which segments we have identified as reportable segments? So add the total of A, add B, add C, add D, add E and add H. How much is the total external sale of these segments which we want to report separately? 305. Divide by 410 into 100. Oh, your answer is incomplete. It is less than 75%. So what you'll have to do, you have to add more segment till you reach a minimum 75% external sales. So I have 2 more segments left with me. If I add either F or G, we will exceed 75%. So see, in the last line I have written a note. As a result of external sale of reportable segment is less than 75% of total external sale of the management should identify more segments, either F or G. So either F or G you can identify. Now I will check whether you are listening to me or not. Come to question number 4. Question number 4. X Limited has identified the following business segments or components. There are 4 business segments: Pharma, FMCG, Ayurveda, others. Now see, in this question what they have done, they have given external sale, internal sale, but they have not given total. So first you will have to take the total of these two and then you have to check 10% of that. Profit is okay, all are in profit, good, and this is asset. Without reading the answer, you have to tell me which of the segments would be reportable. Which of the segments would be reportable? So first what you do, take one total of this external and internal revenue. You have some space on the left side. Take total 97 lakh, 4 lakh, 3 lakh and 41 plus 8, 49 lakh. So how much this total comes to? Is it 1 crore 53 lakh? Yes or no? Into 10% of this, 15 lakh 30,000. So now this is more than 15 lakh 30,000. This is not, and this is yes. So applying revenue test will give me pharma and others, but others is already others. We have to just see FMCG, pharma, Ayurveda, are they reportable separately or not. Then come to profit test. 30 lakh is the total profit. So I need a minimum 3 lakh profit from a segment. So this will satisfy. So under profit test also, pharma. Okay. Others means it will remain others only in any case. And then apply the asset test 90 lakh into 10%, 9 lakh. 9 lakh, pharma, FMCG. So applying asset test, we will identify pharma and FMCG. So pharma and FMCG we have identified as reportable segment. Then we'll check their external sales. External sale is 97 lakh. Divide by 1 crore 8 lakh. How much is that? External sale of pharma and FMCG is 89 point some percentage. Only we have to check more than 75. Don't spend time on this. Just write down some number. If it is more than 75, 89%. So my reportable segment will be pharma, FMCG, and the third will be others. This Ayurveda also you put into others only. See what your answer has to say on this. Quantitative thresholds are calculated below. So what they have done, they have taken in percentage term. And below that they say segment pharma would separately reportable since they meet all the three criteria, though any one criteria is required. FMCG segment does not satisfy the revenue and profit test, but satisfy asset test. So it would also be separately reportable. Ayurveda segment does not meet any threshold. It may not be classified as a reportable segment. Of course, if the management voluntarily want, then they can show it also as a separately reportable segment. Now you solve question number 5. This is the easiest problem, but a wrong question. Identify what is wrong in this question. X Limited has identified 4 operating segments for which revenue data is as follows. Internal sale, external sale, total sale. Segment A, B, C, D. Then it says additional information. Segment C is a new business unit and management expects this segment to make a significant contribution to external revenue in coming years. Which means which segment we are going to disclose at the discretion of the management? C. Even though it may not meet the 10% criteria. Which of the segments would be reportable under the criteria identified in IFRS 8? Now what is wrong in this question? They have only given sales. They have not given profit data, asset data. But the question says which of the segment would be reportable under the criteria identified in IFRS 8. IFRS 8 has 3 criteria for identification of segments which are reportable. Anyway, so whatever data they have given, solve. What is my total sale, internal and external? 1 crore. Take 10%, 10 lakh. So A and D, A plus D. But management also wants to disclose C. So therefore we need to disclose segment A, C and D, and B will be shown as other segment, others. See the answer in your book. The threshold amount is 10 lakh. Segment A and segment D exceeds the quantitative threshold. B and C do not meet the quantitative threshold amount and may not be classified as reportable segment. But there is a note, it says, however, we have not done one more test. We have to see what is the total of external sale of A and D. 30 lakh plus 5 lakh, 35 lakh, divided by 50, 70%. So you'll have to add some more segment first. So then I will add C. If I include C, then the test is satisfied. So between C and D, C management already wants to include, and therefore now you see whether it is satisfying 75%. Yes. So after including C, our external sale is 87%. And these three will become reportable segment. Try one more, question number 8. Identify the reportable segment in respect of PQR Limited, whose information regarding different operating segments is as follows. So there are 6 segments, and you have to identify the reportable segments. This first number is minus 2 lakh. Just check. In your book, probability is typed plus 2 lakh. You make it minus. So let us solve it together. What is the total sale of the company of the segment internal plus external? 28 lakh 50,000. Take 10% of it. 2 lakh 85,000. So 1, 2, 3 and 6 will become a reportable segment. Now you try this one. This has got some negative figure also. 2 lakh and 45,000 is total losses. Take on your calculator 1 lakh 70,000 plus 25,000 plus 20,000. Is it 2 lakh 15,000? Which is higher? 2 lakh 45,000 is higher. So 2 lakh 45,000 into 10%, 24,500. Now you tick mark 1, more than 24,500, 2, 3, 4. Oh, so out of 6, 5 are already covered. Total assets 17 lakh 90,000 into 10%, 1 lakh 79,000. 1, 2, 4 and 6. Correct? 1, 2, 4 and 6 are more than 1 lakh 79,000. So till now how many segments we have identified? 1, 2, this is 1, 2, 3, 4 and 6. Now apply one more test. Go to external sale. Add these numbers. Divide by 24 lakh. 90. Oh, all tests are satisfied. So final answer will be 1, 2, 3, 4 and 6. 9. 9 is the easiest one. Total revenue is only given. So quickly, in 15 seconds. On revenue criteria, which is reportable segment? 30 lakh 68,750 into 10%. So I need a minimum 306875. Check which one is that. Only one. Oh, profit. All are in profit. Very easy. So I need 11,600 rupees here. 2, 4, 5, 6. And I need 1,35,000 here. 2, 3, 4, 5, 6 also. Only which one has been left out? 1. Come back to this first column. Check whether the total revenue of reportable segment is greater than 75%? Yes, how much is that? 98%. 98% is more than 75%. So our final answer is 2, 3, 4, 5 and 6. Okay, now try this one yourself. Question number 10. Look at the screen and try. Close the book. Then try. What happened? Total is not given. And in exam, they don't give you this total also. So half of the country goes wrong in taking total only. Okay, you tell me total of all these columns. Revenue column total. Try on your calculator. You are not even trying on calculator. This all total I want. 1,23,000. This one. This one. Okay. This you give me two total of profit and total of loss. Profit is 9,000 total and loss total is 14,000. And what about this total? Asset total? Haji? 84,000. So first in the exam you have to do this exercise. If this total is also not mentioned, do that exercise. Now come to total sales column. 14,500 minimum I require for reportable segment. A. Then D. E. F. Profit is 9,000, loss is 14,000. Higher of the two, 14,000, take 1,400. 1,400. A. C. E. F. And asset 8,400 minimum requirement. C. D. E. F. Now tell me finally, is A there in this list? Is B there in this list? No, B has no tick mark. C, D, E, F. So take total of external revenue. 111 divided by 123. 90.24%. So this is my final answer. Right? And what is not separately reportable, they will be reported as all other segments. Practically there may be many more segments in the classroom because we have less time. So we normally give 6, 8, 10 segments to the student. Haji? No. This is a question which they ask in the exam. That time you don't remember whether I need to add internal sale also or not. You forget that 75% test also. And then there are calculation errors. Information about other business activities and operating segment that are not reportable. So all these basically minor segments, small segments, they will be disclosed together under one heading called all other segment, separately from other reconciling items. And then one paragraph 2.3 tick mark is called continuity. If the management concludes that an operating segment identified as a reportable segment in the immediately preceding period is of continuing significance. So last year it was identified as a reportable segment. This year it may not be. Last year it may have met 10% condition. This year it may not be. But the management thinks that it is important to disclose this segment in this year also. then information about that segment shall continue to be reported separately in the current period, even if it no longer meets the criteria for reportability. Okay. So if it has been identified in last year as a reportable segment, this year it is not fitting into any of the 10% criteria, but management may think that disclosure is important, they can disclose it. And one more complication you understand, a segment has been identified for the first time as reportable segment in this year, but it was not a reportable segment in the last year. Then the problem will be comparison. How will you give the comparative? So here the standard says, the business activity which did not qualify either as an operating segment or as a reportable segment in the prior period, but qualify as a reportable segment through the quantitative threshold test in the current period. Current year it meets 10% criteria. It's only applicable for those which are identified through quantitative thresholds, means those 10% criteria. Then the comparative figure for the prior period of such reportable segment should also be or shall also be disclosed. So then you have to restate the prior figures so that one can compare current year data with the previous year data. So that is must. And now what about the measurement for the purpose of disclosure? At what amount you are going to present in the segment report? Are you going to follow your accounting data or the data that is submitted to CODM? CODM. But that data can be different from accounting data. Still, all the items of reportable segment shall be stated at the measure reported to the CODM. So now the investors will also get to see what numbers are given to CODM, insider information now. He'll get an insight into how the management looks at the numbers, irrespective of the measure used in entity's financial statement. So this is a very important paragraph. The figures reported in segment report can be different from the figure reported in financial statement. It depends on what figures are reported to CODM. Those figures will also be reported to the investor through operating segments. And that is the second point also. Accounting policy used to measure the line item of reportable segment may be different from that of entity's accounting policy. The purpose here is different. The purpose of this standard is how the management looks at the business. How the management looks at his business. And in the same way, the same information is now shared with the investors also. So that is the interesting part of the standard. That for segment reporting, your accounting policy can be different from entity's accounting policy for preparing the financial statement. And then provide an explanation of the measurement of this segment profit or loss, segment asset, and segment liability for each reportable segment. Then you have to also give an explanation of how these numbers are arrived at in the segment report. Now this standard gives you disclosure requirement. As we have discussed, this is a disclosure based standard. So accounting is not involved. Whatever they have done, it is good enough. For this standard, you have to disclose certain information to make it useful for the users of financial statement. Okay. So what are the disclosure requirement? So first is the descriptive disclosure. The basis of accounting for transaction between reportable segment. Is it there? Yes. Somewhere in paragraph 3.2. Basis of accounting means whether the sale is made by one segment to another segment at cost or at profit, etc. because accordingly the sales figure gets affected, right? Inter-segment sale include sale made by one segment to another. Disclose the basis of that transaction and the nature of any difference between the measure adopted for reporting the profit or loss, asset or liability, and the measure adopted for reporting profit or loss, asset and liability in the entity's financial statement. So you can follow different accounting policy for segment report, but disclose the difference. Okay, disclose the difference. Disclose the difference between the measure adopted for reporting in segment report and for accounting purpose. The nature of any change relative to prior period in the measurement method, including its effect on determining the profit or loss. So in case any measurement method has changed, basis of measurement has changed compared to prior period, disclose that, and its effect in profit or loss will be disclosed, and the nature and effect of any asymmetrical allocation to reportable segment. So allocation means some expenses may be allocated to the segment, and then in case if it is not symmetrical, not proper, then in that case you have to make a disclosure of that, why some segments were given more allocation. And then there is a quantitative reconciliation you have to do. What is the quantitative reconciliation? You are preparing segment report which will give total revenue of the segment, and you are also preparing statement of profit and loss, that also gives total revenue of the entity. So don't you think the total of segment revenue of all segments should match with the total of the enterprise revenue? And therefore you have to give this reconciliation. Same thing for profit, asset, liabilities. We are going to prepare a small question where we will do this exercise. Some items may not be included in segment revenue, segment profit, so those will come as a reconciling item. For example, income tax does not form part of segment expense or segment asset or segment liability. Interest income, interest expense usually do not form part of segment income or segment expense unless your business is to deal in such investment products. So in that case they will come as a reconciling item. Corporate assets are usually not forming part of segment asset, so those will come as a reconciling item. Okay, with the entities revenue, profit, asset and liabilities respectively. Now come to para 3.4, some more discussion. Wait. When there is a change in entity's internal organization, change in entity's internal organization resulting in change in the composition of reportable segment. What do you mean by that? Suppose this is my segment. It contains A, B, C, D, E, F, G, H, 8 products. Okay. So this 8 products will be called composition of the reportable segment. But then the entity does some restructuring, internal reorganization. Now this segment will only comprise of A, B, C, D, F, G and H. They have shifted to other operating segment now. Then what will you do? The entity shall restate the earlier period amount. So previous year figure will now be based on this calculation, or disclose the fact whether restatement has been done or not. If information is not available or cost to develop that information is excessive. So there is a relaxation here. What is the relaxation? You need to restate previous year figure. But in case if the information is not available or the cost to develop that information is very high, excessive, let it be. Okay. Because opening the books of account of the previous year and doing all this calculation may be time consuming because your software was designed previously for that purpose. So now they may not give you the same data that you want now. Either you have to change your entire software, put more manpower in that. Management will say we should look after business or do this exercise. Then you are exempted. If the restatement is not done due to above stated reasons, then the entity shall disclose amount for the current period on the both old and new basis. At least you disclose on old and new basis for the new composition. Is it right? That can be done unless if information is not available to or cost to develop that information is excessive. Again, relaxation. That in case if you can't give this disclosure also, then you are relaxed. Now come to previous page or in the same page, just check. Disclosure requirements are entity shall also disclose paragraph 3. Paragraph 3, entity shall also disclose the following about each reportable segment. Now this is the main paragraph. What are the disclosure requirement for each reportable segment? Which information will you give? Even if you forget this, think as an investor, what information do I need? Okay, to take the decisions. Are included in the measure, an entity shall also disclose the following about each reportable segment. If the specified amounts are included in the measure of segment profit or loss, reviewed by the CODM or otherwise regularly provided to the CODM, even if not included in that measure of segment profit or loss. So following information you have to disclose, even if it is not forming part of segment profit or loss, but it is either reviewed by the CODM or informed regularly provided to the CODM. Example, revenue from external customer, revenue income from transaction with other operating segment of the same entity. So this we will call sale from external party, inter-segment sale. You have to disclose. Interest income, interest expense, depreciation and amortization, significant non-cash item other than those of depreciation and amortization. Now we'll come to one last part of this wonderful chapter, entity-wide disclosure. The standard required disclosure of revenue attributable to external customers. So this is overall entity-wise disclosure, which may not be relevant for a particular segment but for the entire organization. Like for example, you have to disclose the concentration of revenue with customers. Significant customer, will come to that. Standard requires disclosure of revenue attributable to external customer. The disclosure of amount in this area shall be based on financial information used to produce the entity's financial statement. Now the basis for this calculation will be financial statement on the basis of product or service. The entity shall disclose the revenue from external customer for each product or services or group of product or services. Then on the basis of geographical area, the entity shall disclose the revenue from external customer attributed to entity's country of domicile, home sale, domestic sale, and attributed to all foreign countries, with separate disclosure about individual foreign country from which revenue considered to be significant and or material are generated. So domestic country sale, foreign country sale, and in foreign country also those countries where the revenue amount is significant will be disclosed. Then there are some disclosure about non-current asset. Non-current asset means basically your fixed asset. Okay, basically fixed asset, property, plant, equipment, and intangible asset. That you will disclose again in the country's domicile, that is where it is located, and in other countries with reference to individual foreign countries in which material non-current assets are located. Why this information is required? If you have lot of assets in Afghanistan, your factories in Afghanistan, 90% of your assets are in that country. Is there any risk involved? Yes. Because some countries may come under trouble, and if your major assets are located there, then you are exposed to the risk. If information in respect of A and B means these 2 points, A means on the basis of product or service, B means on the basis of geographical area, is not available, or the cost to develop the same is excessive, then the entity shall disclose the fact and explain the reason why the information is not being disclosed. Because this means demanding too much of information from the company. You are demanding information on the basis of product, service, to customers, location. Of course, this is diluting too much of business secrecy. So if I am the CODM, I will say, oh, this is not possible. Okay. Some companies may disclose also, good companies. Information about major customer. Aji? Like if you see Infosys balance sheet, lot of disclosures are there, which other companies don't disclose. But Infosys does not follow IFRS, they follow Ind AS. Now, information about major customers. When we are doing business with few customers, and if we are exposing ourselves to few customers in a major way, we are exposed to risk also. Like if you have a customer in America, and your 70-80% of your revenue comes from that customer in USA, US government brings a law, no outsourcing of your work to India. See what will happen to this company. This company might become a non-going concern. So therefore, we are actually passing on this information to our stakeholders. Then let them decide. If 10% or more of external revenue of the entity is generated from a single customer, the same shall be disclosed with details of source segment for those revenue. Now, but this is again lot of dilution of your business secret, but the standard wants like this. There may be transaction between reporting entity and the entities which are under common control. So now what they are saying, if you are transacting with a group entity, A Limited is transacting with B, and B has a subsidiary C. So both this B and C together will be considered as a single customer. Otherwise, companies will divide their revenue into different invoices, right? Some in the name of B, some in the name of C. But then the standard says if they are under common control, then they shall be treated as a single customer. This word common control we'll discuss later. Government and its control entities will be treated as single customer. For identifying whether this standard is applicable, this 10% criteria is applicable or not. So if you look at this list of disclosures, these are very, very strict, and lot of information now which was earlier in management's domain will come in public domain now. Good for the investor community. They can take a more informed decision. What is the change in Ind AS 108 and IFRS 8? There is really speaking no major change. It's only about the applicability. IFRS 8 says that standard will apply to separate or individual financial statement of an entity which is either listed or in the process of getting listed. The standard IFRS 8 will apply to CFS of a group with a parent which is listed or which is in the process of listing. What about Ind AS 8? The above have been deleted in Ind AS 108 as the applicability or exemption to Indian accounting standard are governed by the Companies Act and the rules made thereunder. Is it right? So, Companies Act and rules made thereunder, Indian accounting standard rules, makes a list of the entities to whom Ind AS is applicable. That means it is based on net worth criteria, listing criteria, NBFC, bank, insurance. So if you fit into one of those criteria, then you'll apply the standard, otherwise not. So if you look at IFRS, it is mostly applicable to listed entities or in the process of getting listed because they are raising funds from the public. Okay. So when you're raising funds from public in large, then you have the responsibility, the moral obligation to give them so much information that they can take a more appropriate decision, even though you might have to compromise with some of your business secrecy. Is it right? Now we will continue tomorrow.